they violated a big part of the agreement we made. You know, if you read that whole statement, I was very nice to them. I helped them because they were in trouble with the stoppage of a massive amount of business. But I'm sure that I'll speak to President Xi and hopefully we'll work that out. But yeah, there's a violation of the agreement.
So good afternoon and welcome to this week's fundamental and technical trading analysis video. I hope you had a good trading week last week. If you did, it was a bit of a zigzaggy trading week last week. We did get some decent setups, but it was a bit of an uncertain one again with the way the markets are at the minute. It's all to do with tariffs, Trump saying things, and the way the market's interpreting it. I remember last week we had the courts ruling that the tariffs were illegal, which did actually spike the dollar, because if we've not figured it out by now, the tariffs seem to be a negative for the dollar. Not necessarily a negative for the country, but a negative for the dollar. Negative for growth in the short term anyway. Because every time we get tariff announcements, the dollar seems to sell off. So basically, when the courts announced that these tariffs were potentially illegal and that they had to get reversed, the dollar did have a bit of a bounce, and we saw it in a lot of the currency pairs. But that only gave us, and you can see where I drew this, that only gave us a good opportunity to get short of these supply zones, especially on the dollar yen. The pound dollar didn't really sort of get deep enough, and I'll go through the technicals in a little while. But yeah, we did get some good pullbacks on that news. But then basically the day after that, the news was that Trump's team, or whatever, Trump's party, were basically going to reject that and find a way around it. And when I saw that headline come out, to be honest, I did think it was a bit of a nothing headline. The markets did react to it, but I can't see, because we've seen it a lot as well, haven't we? We've seen a lot of people disagreeing with Trump's policies, especially on gender, and these universities are disagreeing with all these things, all these topics, and courts coming out and saying, well, you know, we can do what we want. And to be honest, they can't. In a way, they're spitting the dummy out. But anyway, we'll not get too into politics. The market reaction is what's important, really, and we're here to make money, aren't we? We're here to trade the market. We want to go with the direction of the market. So yeah, that was last week. We had a bit of a zigzag. So it went up, then it sold off the next day, when basically the headlines were, well, this court's ruled that these tariffs are illegal and they're going to have to pay all the money back that they've made for them. And Trump's basically said, no, not really. And then it's sold off again. And we did have a big sell-off, especially on here, and yeah, so zigzaggy trading, very uncertain and very difficult to trade, to be honest. Excuse me, have a last sip of coffee. So let's get into it, guys. So the week ahead, June the 2nd, markets preparing for another volatile week, driven by renewed tariff threats following President Trump's accusations that China violated a preliminary trade agreement with the US. So again, tariffs are back in the picture. I think this was last week when I was doing my video last week. The tariffs were the main issue again, annoyingly, because like I keep saying, it's very hard to trade when you trade in sort of reactive news like this. But you know, when tariffs come in, it usually signals risk off, uncertainty. When risk is off, there are certain assets that we can trade. You know, the Japanese yen, the Swiss franc gain, gold. Gold is another thing that we can trade in risk off. And then we can also use the VIX as well, which maps the volatility of the S&P 500 index. So basically, I'm getting a bit off track here, but if this is below 20, which I've drawn out here, we're usually in risk on, which means markets are more certain. And yeah, but we're not sort of panicking. We're not in panic mode. Money isn't flowing to risk off assets. Money's going into more high beta assets, high returning assets such as the Australian dollar, New Zealand dollar. Risk off currencies. What else is there? Possibly the pound. But then if this is above 20, which you can see here, this is when the tariffs was announced. If this is above 20, then the markets are sort of in a risk off. So there's more uncertainty, more panic. Money's flowing into things like the Japanese yen and the euro. Actually, now the euro has become quite a big. It's sort of taken the role of the risk off currency now that the USA is having more. You could isolationist, nationalist policies in a way. That's a sort of the theme that's emerging now, because every time we've had risk off, the euro has benefited, and you can see that in the charts. The euro dollar has been on this big uptrend. But yeah, we'll get into the technicals. I'll keep reading. So basically China's been naughty basically and done something to piss off Mr. Trump, which isn't good. So we'll see what happens this week. Investor focus will be a loss. Do they mean to type a lot? Investor focus will be a lot on a loss. Is that even a word? One sec. Bit of a sidetrack. I'm just curious. Oh no, I think it is a typo. Sorry about that. Investor focus will be a lot on US labour market report, alongside ISM manufacturing and services PMIs, speeches by Fed officials, JOLTS, job openings, factory orders and foreign trade data. Interest rate announcements are expected from the European Central Bank, Bank of Canada and Reserve Bank of India. We don't really pay attention to, or we don't trade India, so key inflation readings are due from the Euro area, South Korea, Switzerland and Turkey. So Euro and Switzerland will be focusing on. GDP growth rate from Switzerland, South Africa, Australia will be closely watched. April foreign trade figures from Australia, Canada, Brazil, Germany, France are on tap, alongside a flurry of global PMI releases, including manufacturing data from South Korea, Russia, Italy, Spain, Canada and China, and services data from Spain, Italy, Brazil and China. So yeah, quite a lot of data coming this week, which will be interesting. But as I say, at the minute, the tariff story is the biggest story, and it sort of dominates everything else. So we do have this chart that I use, and I input the numbers and it spits out who's the best. So whoever's got the lowest number on this is basically the best country. But this sort of tells you who is the best country now. It doesn't necessarily look to the future in a way. So it's a good tool that I use to see what countries are doing well in the here and now, and sort of to see where they are in the business cycle. So for example, the United Kingdom's number one. So if we just go through GDP year on year, it's fourth. So not the greatest, but GDP quarter on quarter, it's number one, with Switzerland, New Zealand. New Zealand's had a bit of a bounce as well. Yeah, look at that, 1.8% increase from the last quarter. But they were in the negative last time, so they've just avoided a technical recession, which is could be quite a positive for the New Zealand actually. But anyway, I'm getting distracted. United Kingdom, so the number two with the interest rates, number two for inflation rate, number one for inflation rate month to month, number one for core inflation rate. So the UK's inflation is very high right now, which means the central bank isn't really gonna be cutting rates, to be honest. So usually when an inflation rate is way above 2%, a central bank will hike rates to try and cool the economy. But it's a weird one that I live in the UK, and it doesn't really feel like the things that I see, the things that I read, and just generally living here, it doesn't feel like the economy's booming. So this is where inflation comes in from other means like the money supply, and sort of just spending in general. That can increase, fiscal spending, the government spending, that can increase inflation. So it's not always because the economy is doing well. However, this is how we trade, and when a currency has high interest rates, high inflation, the currency usually gets higher in value. So it's a nuanced approach. It's economics, but it's also understanding what moves the currencies. And at the minute, I'm on the wrong one, are you? At the minute, the United Kingdom is number one, and it's a buy. So we're just waiting on pullbacks for the United Kingdom. So yeah, in unemployment, we're quite high actually. In unemployment, we're 5th, which just proves my point that we've got high inflation, but that doesn't always mean that the economy is doing well. So that there might be other factors that are increasing the inflation, which is probably the government. Yeah, the country's in a bit of a mess at the minute, but I won't get into that. Manufacturing PMI, look, we're 8th. We're 8th in manufacturing. I mean, we've never really been a big manufacturer anymore. We're more of a services economy, but we're 5th for services. And then wage growth, we're actually number 1. So wage growth, we have had decent wage growth, which has helped soften the blow of inflation. But yeah, UK is a buy at the minute. What was I going to say then? Yeah, but so basically this chart is how I determine who's number 1 and where they are on the business cycle. But then you also have to look to the future as well. So this is where you're reading articles, you're looking at what central banks are doing, because you're not married to any one currency in trading. You need to sort of be fluid. When I first started trading, I was sort of I had this weird idea in my head that the pound's always a buy, or the dollar's always a buy, but you need to sort of be able to change your opinion quite quickly, because things do change quite quickly. So say for example, in the next coming weeks, the United Kingdom, the central bank, Bank of England, comes out and says we're actually going to hike, we're actually going to cut more than expected. Then even though this is number 1, the pound will probably be a sell. And actually, because the pound has been increasing in value so much recently, look, we're up at these highs on the pound. If that did start happening, that the pound would be a decent sell, because we're an expensive place, and it's best to sell when something's expensive. So yeah, and you can see Canada's number 8, Australia's number 2, Euro's number 6, Japan's number 4, New Zealand's number 4, Swiss franc number 7, United States number 3. But as we know, the United States this year has sort of been a sell. Everyone's saying that the US dollar's a sell this year, and also even though the euro area is number 6, the euro area is a buy, mainly because of the fiscal spending that's coming. They got that deal a few months ago, which opened up the ability for the euro to the euro area to spend something like an extra trillion euros or something on fiscal spending, which is gonna bump up GDP, bump up interest rates, all these sort of things, bump up inflation. So that's why markets are pricing that in now. As well as that, the euro is benefiting from the US dollar sort of becoming less valuable in that sense, and the euro is sort of becoming the new dollar in a way. So yeah, anyway, that's just a little bit about this chart. If you do want to learn more about this, I can put you in touch with my mentor. He taught me all about this. This is the fundamentals of Forex trading. I can get you in touch with him. He has a brilliant trading room, and a brilliant course as well. So yeah, if you are interested about learning about the fundamentals and how to trade properly, just give a comment in the comments, and I will give you my email address, and I can send you the details, because he's open to having more people in the group. Right, anyway, I better get a move on now. I'm getting distracted by the numbers. Drive me insane, all the numbers. Right, where was I? I haven't finished reading this yet, have I? Oh no, I did. Right, we'll quickly go through the so this is the calendar for next week. So we'll just quickly go through. So we've got GDP for Swiss franc, ISM manufacturing PMI, that's usually quite a big hitter. RBA meeting minutes, inflation numbers for euro, job openings, GDP growth rate for Australia, Bank of Canada interest rate decision was expected to hold. Also, guys, another little thing on this. So the consensus and the forecast is expected to hold for the Bank of Canada. We did actually get some pretty poor data for Canada. Where was it? I think it could have been. Might have been inflation. Was it inflation last week? So inflation is actually lower than the 2% target. So we could potentially get. I mean, I doubt it, but we could potentially get a maybe even a hike. I mean, to be fair, we probably won't get a hike, but we could potentially get some sort of would they cut? What's the GDP like? The GDP is pretty good. No, I think if we're going to get a surprise, it's going to be a surprise hike, and I can't see any central banks at the minute hiking. However, that was interesting, the fact it was 1.7. Sorry guys, 1 second, let's check for last week. Was it? Oh no, it wasn't inflation, sorry. It was GDP. It was GDP last Friday, which came in higher than expected for the annualized rate. So yeah, I mean, no, I don't think they'll hike. But if they do, this is what I'm trying to say. This is where there's an opportunity here, because sometimes you do get an interest rate decision that goes against the consensus. Because basically, what's happened now is the markets have priced in the rate holds, and you can see the Canadian dollar sort of ranged. It's sort of moving sideways. If we get a hike, and it's an unsurprised hike, something like that could happen, because the market now needs to price in the fact that there's a new interest rate that's not been priced in. But yeah, I won't go too into depth into that. That could take a while to explain that. But I just thought I'd just talk about that, because that is when you get a bank that's having an interest rate decision, there are opportunities to make money if the data comes out unexpected. Anyway, so Thursday, not much. Oh no, to be fair, ECB interest rate decision, Swiss franc unemployment rate, and then Friday, unemployment for Canada and USA, non-farm payrolls. So yeah, there's quite a bit of important data coming out next week to keep an eye on. But like I said, the main thing to keep an eye on next week will be the tariff news, because none of this really matters in the short term. If the tariff things kick off again and Trump falls out with China, then we're probably going to be in risk off, and then that means the currencies that aren't fundamentally doing well, like the Swiss franc and basically the Swiss franc, the Japanese yen is in a hiking cycle, but the Japanese yen will gain as well. This is why I said this last week, the Japanese yen is probably one of the best currencies to buy at the minute, because it benefits from risk off, and it also benefits because it's in a hiking cycle. So it does well in both market conditions. So anyway, moving on, and I'll get through these quickly because I've waffled on today. Just through the indexes. So dollar index, you can see last week we moved up and then we moved down into this supply zone. So I did actually get short last week on what was it? I think it was USD JPY. But yeah, if you're looking for shorts now on the dollar again, you're probably looking to come back into this supply zone and then move down here. I will actually say as well, see this demand zone here that was made in April. It's been touched once, twice, 3. So this will be the 4th time that it's bounced back into this level. And usually the more times that a price has touched a level, the sort of less powerful that demand zone becomes. So what we could see happen is it break, and we could get an even further push down to sort of this level here. Something like that. So yeah, it's always good to just keep that in mind as well, because if you get up here, it gives you confidence to hold them. Because if you're thinking, well, this has been touched like 3-4 times, I could hold and get like a 5, 6, 7 to 1 trade and just increase my risk reward. So yeah, if you want to buy the dollar, probably looking down here, but no, I wouldn't even buy the dollar down here, because like I said before, it's been touched many times and the dollar just isn't a buy for me at the minute. It's moving on to the euro index. So the euro for me is still a buy. It's benefiting from risk off flows, and the fiscal policy is still there. It'll be interesting to see what the ECB say this week. So yeah, and we're sort of expensive here on the RSI. So for the euro, probably waiting for it to come down here again to get some buys. However, this level has been touched again quite a lot. It sort of moved sideways. So ideally, if we can get down to this level, something like this. Yeah, you can see the resistance, support. If we can get something down to here, that'd be perfect for a buy. And moving on to the pound index. So this is looking quite nice actually. The pound index did sell off finally last week. So you can see how it was overbought. It was overbought for quite a while, the pound. So we finally had a pullback and we're looking in the cheap area now. If we can get a bit more down to here, maybe that'd be nice to get a buy on the pound, potentially against the Swiss franc if we're in risk on, or maybe against possibly against maybe the CAD, maybe NZD, possibly NZD, but it's tricky at the minute. A lot of currencies have had good news actually, NZD being one of them recently. So, but yeah, if you want to buy the pound, you're looking for that. If you want to sell the pound, looking to get back up into here, this supply zone up here, and look for sells up there. The CAD. So the CAD, like I said, we are in the expensive area here. We're in a supply zone, so now would be a good place to sell. We do have the interest rate decision on, when is it? Is it Wednesday? Wednesday, yeah. So we've got the interest rate decision on Wednesday. So we'll just wait and see what happens there. If we get even if we get a surprise cut, you know, that could be a good sell. So if price sort of hovers around here, and then we get a surprise cut, that'd be a nice place to sell. If we get a surprise hike, we probably want Canadian dollar to be down here. We did actually make a new demand zone there. So yeah, that's the Canadian dollar. So moving on to the Australian dollar, and did we break this demand zone last week? We have actually got a demand zone down here, which I forgot to draw out, but yeah, this looks like it's sort of not respecting this demand zone here. So what I'm going to do, I'm going to delete it. You can see price has closed under it by a reasonable amount. So I'm going to delete that. I'm going to move this support down to here. And we did make a new low here, even though it closed up here. We did push down, so I'm going to draw a new supply zone here. So yeah, we're in a bit of no man's land at the minute. If you want to buy the Australian dollar, probably want to wait for now to get it down to here. Get nice buys like that. If you want to sell, probably looking something like that. A bit of supply and a bit of support and resistance there as well, I can see. Something like that. Yeah. Moving on to NZD. So yeah, the NZD last week, it cut its rates, I think, but it was seen as a hawkish cut. But then other articles I was reading said it was a bit of a dovish meeting. So again, not that clear, not really that clear for me. So yeah, the NZD's been a bit of a sell for quite a while, but now I'm not really sure. Not really sure about the NZD. Its data's improving, and yeah, some of the central bank members were a little bit hawkish compared to what they have been recently. So I really just want to stay away from the NZD until I'm a bit more clear on it. But if you want to buy, you're probably looking for a bit of a drop down to here. If you want to sell, again, you want to get to the top of this range. We're right in the middle here. So that's the NZD. Swiss franc. So Swiss franc actually is one of the clearest sells. If you look at the data, it's number 7. Its interest rate is very, very low. So when an interest rate is that low, the carry trade does come into effect when risk is on. So money will flow into currencies with a high interest rate, say for example the Australian dollar or yeah, the pound. So they'll buy the Swiss franc at cheap rate and sell. Sorry, they'll buy the pound at against the Swiss franc because the interest rate differentials are so strong, because there's such a big difference there. And yeah, I mean, Switzerland's inflation rate was actually 0 last reading, and the inflation rate month on month was 0. So they might even cut to 0 interest rates to stimulate a bit of inflation, and the GDP isn't bad, so they're not in stagflation, but their interest rates might go to zero, it might even go to negative, which would be nice, because I remember when the Japanese yen was in the negative, and it was a decent trade. That USD JPY trade for a few years was a nice pair to trade, because there was such a strong differential in the interest rates. So yeah, Swiss franc is a sell for me at the minute, and we are actually expensive now. So we did make a new demand zone there, but yeah, we're looking sort of at the top of this range now, so anywhere around here we could look for sells on Swiss franc pairs. We're down to here, yeah, and you can see we've sort of made our way back down from this spike when the tariffs were announced. So what would I buy the Swiss franc against? Possibly the pound. And look, the pound is actually pulled back into this demand zone, and it's cheap as well. So this could be an actual setup for next week. Yeah, this is one I'll be watching for next week. Pound Swiss franc. Yeah, and we are sort of fair value cheapish on the 1 month. On the 1 month range, so that is actually a nice setup, I'm thinking. Pound Swiss, but obviously it depends on risk on or risk off with the tariffs. Yeah, that could be nice, something like that. Ride it all the way to the top there. That will be 130 pips, something like that. Let's have a sip of coffee. So yeah, technically that's very nice. That's very nice. Look, the pound's cheap. Swiss franc is expensive. Fundamentally, interest rate wise, they are decent. So yeah. Also against the yen as well. So we are actually oversold on the yen too, which is nice. That is nice. And that actually looks like a bit of a stop on that. That looks like a bit of a liquidity hunt to me. Because look, you'll have a lot of people will be selling on this candle, or even the lower time frame candles. What was this spike here? This was probably the stuff to do with China, I'm guessing. Don't think I was at the charts at this point. But yeah, that looks decent as well. That might be something I'm getting involved in next week, depending on sentiment. But yeah, moving on to finally Japanese yen. The yen index. So we did make a new demand zone here. Not the strongest one, but you can see prices have come down below this candle, and from here they've shot up and made a new high above this candle. So yeah, they've this shows that this area there is demand to push prices higher. So yeah, if we do get, because you can see it's above 50 on the RSI, which means it's technically a bit expensive. What we really want is another maybe pull back into there, and then something like that. But yeah, we're only just expensive, to be fair, so I might go in on it maybe, but ideally I'd want it to be down here. But yeah, that's the Japanese yen. Japanese yen again is a buy still. The central bank is hiking, and the benefit off risk off as well. And this year seems to be quite a bit of an uncertain year due to these tariffs. So yeah, it benefits from both aspects of market trading, and you can see it sort of had a slowish uptrend for the year. You can see it's been on a massive downtrend. This is when the rates were negative rates. It's only just bounced during the hiking cycle, so the Japanese yen potentially has got a long way to go. This is why money is flowing into the yen, because it's very cheap. But yeah, moving on to Euro USD finally, for just going through the majors quickly. So yeah, we did spike up last week. If you want to get long on euro dollar, which I do, probably want to wait for a pullback into this demand zone again, and then we can get long, potentially hold up to there. Euro pound, so yeah, two strong currencies really. The pound is doing really well this year due to a number of reasons. One of the main reasons, I think, is its sort of insulation from the tariffs. So really you can see that the euro pound has been in a downtrend, signalling that the pound is actually stronger than the euro, even though the euro is strong, which shows how strong the pound's been. So if you do want to get short on this pair, probably looking for prices to get into this supply zone, and then we can do something like that. That should be quite nice. Nice fresh supply zone here. It's moved down a decent amount. These levels. So yeah, that is the euro pound USD. So we did sort of touch this demand zone last week and bounce back. I'll be waiting for prices to sort of come into this demand zone again, and then we can ride it to the top again. Not really many supply zones been made last week, so yeah, we'll leave it at that. USD CAD, yeah, not really a pair that I want to trade, to be honest. We did make a new supply zone just here. I'll show you. Ooh. There. And yeah, that's that really. If you want to, probably USD CAD. If you want to get short on the dollar and buy the CAD, this would be a nice little area to do so here, but probably want to wait for the Canadian central bank to have their meeting and basically give their summary on the currency next week. So we'll probably wait and see before we get in any Canadian dollar trades for that. Moving on to USD JPY. So yeah, last week we came up here, and that looked like a nice liquidity hunt, that, and its prices have bounced back. Yeah, this was the bounce as well, to do with the courts thing. So again, we have to be patient and wait for prices to probably come back up into here, wait for some sort of setup, and then we can ride it back down to there. And yeah, that'd be a nice trade if we can get up to there. So that's the USD JPY. USD Swiss franc, yeah, the same thing happened again. It spiked up and just came right back down. Again, it's a week versus week sort of pair, this, so I'm not really interested, to be honest. I prefer to trade, obviously, a strong versus weak, or a weak versus strong, or a diverging or a converging trade, so a central bank or a country that's doing well versus one that's doing not so well, or conversely a country that's been doing well and sort of starting to show signs of the business cycle. So it's been doing well, maybe inflation's getting too high now, that central banks is going to start the cutting cycle, versus a currency that's been doing poorly. But now it's sort of got its lowered inflation rates too low, so the economy is doing well, and now inflation is getting too high, so it's going to start hiking, which we're seeing in Japan. That's why they're starting hiking cycle. So that'll be a convergence when it's the other way around. But the USD Swiss franc at the minute is sort of two weak currencies, so not really interested in trading it, to be honest. We are in a demand zone now, quite a strong one, and you could have made money, to be fair. Last week there was a trade here, you could have made some money there, you could have made some money in the supply zone, but you don't really want to get in the habit of just trading the technicals purely, because it's not always going to work. That's me anyway. I prefer to have a higher win rate and trade the fundamentals and be strict with it, because if you're just going to trade the technicals, you're not really understanding why a currency is moving up or down. You might get lucky a few times and make some money, but I'll leave it at that. I'm not really bothered about this pair. Aussie dollar, again, not really bothered about this pair either, to be honest, so I'll leave that one for now. NZD USD, again, not really bothered. I mean, we had the bit of a good news for the New Zealand dollar last week, about the hawkish cut, so potentially if prices get down to here, maybe you could find some buys down here, but it's not the strongest buy, the New Zealand dollar, for me anyway. It's not the strongest buy, and neither is the dollar, so that's why it's a weak pair. So yeah guys, mainly USD JPY, that's what I'll be looking for next week. That is a nice strong divergence between two currencies. Pound USD, again, that's probably a nice trade to look for buys. The only thing for this trade is if it does come down to here, we're still not cheap on the 1 month range, so I mean that the trade still can work out, but we're still not considered cheap, so you need to wait 13th of May, so you'd need to wait another two weeks, something like that. So yeah, I mean, if we can get down to this one, this will be a very decent buy. Very strong demand zone here, and it's fresh as well, and it's a decent sized pullback. But yeah, Euro USD as well, that'd be quite a strong buy for me. But yeah, we'll see how it goes. We'll keep on top of the news this week for the tariffs. Like I said, there's a lot of data coming out on the calendar next week, so we'll keep an eye on that, and we'll see what next week brings. So thank you guys for watching, and I'll waffle on a bit this week, but I hope I got the point across and you got some valuable insights into the markets this week. It's going to be another tricky week, I think, with the tariff, so yeah, just don't jump into any trades. Don't jump in before data gets released. Wait for the data to get released, wait for the dust to settle, and then jump in the trades, because there's no rush in trading, especially the way I trade anyway. Fundamental swing trading. I mean, I'm not a scalper. If you're a scalper, that's a completely different world. But there's no rush in this trading. We like to take our time. Make a coffee, watch the charts move, watch the clouds go by. Yeah, just take our time. There's no rush. There's no rush in this style of trading. Yeah, wait for the data, wait for the headlines, wait for the experts to sort of interpret it all, and then once we get a strong bias, that's when we go in and we can make some decent money in this game. So yeah, just be patient basically. So yeah, that is the video, guys. I hope you did enjoy. Please, if you did enjoy, like the video. Also, yeah, comment if you want to get in touch with my mentor. He is the one who taught me all about this, and he's a very good trader, very disciplined, very knowledgeable, and yeah, he's taking people on now. So yeah, if you do fancy that, just put that in the comments and I can put you into the right place. And yeah, have a good trading week, good luck, and take care. Cheers, bye bye.